Good morning and welcome to the Friday morning currency index report. Just a brief rundown of what happened yesterday. It was a fairly busy day on the markets. We had a lot of data coming out. We also had a lot from Friday from the US because it's actually Independence Day today. So all of the data that should have come out today actually came out yesterday. The morning was all about market PMI, market services PMI. There was about 7 or 8 different European countries releasing their figure, plus the overall EU figure and the UK. Overall, it was a bit of a mixed bag. Some missed, some exceeded, and some came out as expected. The UK actually missed the forecast, but it's still the highest reading out of all the countries. So the pound's still doing well from the data releases. We then came on to sort of lunchtime. The ECB had their monthly policy meeting. Last month they cut their interest rates and deposit rate the interest rate to 0.15% and the overnight borrowing rate to a negative figure. We weren't expecting anything to happen today. Nothing did happen, but the subsequent press conference, Mario Draghi did announce that as of January 2015, there's a couple of changes to how they run their meetings. They're not going to be monthly anymore. They're going to be every 6 weeks. And they're also going to release minutes as opposed to having a press conference, much like the Bank of England do here. So a couple of changes there as of next year. He also did mention that unanimous voting that they will still consider further monetary policy tightening, be it through interest rate cuts or QE, should inflation stay low for a prolonged time in the EU. So we'll have to watch this space, but it did mean the euro did weaken further against the dollar and the pound yesterday. Another ½ cent. Sterling now at a 2-3 year high, pushing further resistance points to the upside against the euro. For the US, as mentioned, it's Independence Day today, so we had the key non-farm payrolls data and average earnings and unemployment figures. Actually came out much better than expected, so we did see a spike for the dollar, which has been very weak of late, pushing 5-year lows against sterling, so it's the best it's been in 5-6 years for people buying US dollars. It did have a bit of a respite, as I said, with the data release, but it was short-lived. The figures were better than expected. There was some jobless claims figures were worse than expected. But over the rest of the afternoon, the dollar did lose any strength that it had, corrected back to the highs that we've seen for sterling against the dollar. The only other currency of note, Thai baht, is currently at its weakest level in about 5 years. The recent upheaval there and political unrest has caused the weakness. The rates have moved about 20% in that time, so it's in the last year. Just for the last year, it's moved 20%. So a great time for anyone buying Thai baht. And another currency is South African rand, which in the past few weeks has weakened around 6%. So again, great time to be taking advantage if you've got a South African rand requirement. Today's Independence Day, so nothing from the US. Very quiet on the markets with just Halifax house price index for the UK and the German industrial production. So not a lot to go on. Should be a fairly quiet day, but we'll have to see.